Australian mining firm Base Resources is still on course to commence commercial production from its Kwale Mineral Sand project in the coastal region of Kenya. Late last year, Kenya's then Environment Minister Chirau Ali Makwere unilaterally revoked 3 out of the 4 licenses issued to the firm, claiming it hadn't met the conditions stipulated when those licenses were issued. Base Resources has so far successfully challenged that decision in court, which at its core revolves around a government regulation which seeks to have 35% of all mining firms in Kenya owned by locals. I spoke to Base Resources Managing Director Tim Carstens earlier today. I started our conversation by asking him why, in his view, the problem with local ownership in Kenya is one of market structure and not a question of capital.
We did look at trying to secure Kenyan investment in the very early days, but there's no practical method for us to raise money in Kenya at the moment for the simple reason that we can't list on the Nairobi Stock Exchange because we haven't had the history of profits. We're a new company. And also, while there's a lot of sophisticated investors in Kenya, there's no experience with mining. And I've spent a number of days or weeks over the last 6 months talking to the major investment funds here in Kenya about mining. And for most of them, that was the first time they'd ever been presented to by a mining company. And so there's a period of having to get familiar with the sector before these funds and these investors are ready to put their money in. And we're not there yet. There just isn't that appetite to take mining risk. But we are making progress. I mean, so far we've been able to get about 1% of the company, which is the Australian parent company, Base Resources, owned by Kenyans.
Looking at some of the cash flow projections you're making here, cash surplus of over $1 billion in a 13-year time frame, $550 million in cash flow for the first 5 years of operations. Wouldn't it essentially be fair to argue that, strictly speaking, Base Resources doesn't need to raise any more money at all?
We definitely don't need to raise any more money. So any increased participation by Kenya is not going to be by way of a new offer of shares. The point I was trying to make is that right now, Kenyans can buy as big a slice of this company as they want by buying the shares at the market price on the market. The interesting thing is that most of our major shareholders bought into the company at 55 cents per share. At the moment, we're trading at about 37 cents a share.
What kind of feedback are you getting in your roadshow at the moment?
Very positive. We've run a couple of site visits for these investors. As I said, we've got about 1% of the company now that's owned by local investors.
And these are institutional shareholders?
Mostly institutional, but there are a couple of high net worth individuals who have also come on. We're also we're working at the moment with CFC Stanbic, who are in the process of setting up a global trading platform, which means that anyone in Kenya who is able to set up an account with CFC Stanbic would be able to buy our shares on any of the exchanges in exactly the same way as they would buy them on the Nairobi Stock Exchange. That will really open up that opportunity. Now that's a couple of months away yet, but we'll certainly make some announcements about that when it's ready to go.